Proudly brought to you by the MBA Cohort. Conversations with Trendsetters.
So Joe, welcome to the show. Welcome to the MBA Cohort. Today we'll be talking about Bitcoin. How and why did you get into Bitcoin?
Cool. Well, thank you, Christina, for having me on. I'm very proud to be on, not just as a UConn alumni, but as a Connecticut resident my entire life, including right now. We're in a very unique opportunity right now with Bitcoin and digital currencies, as you'll learn through this conversation, where this is a very new technology. It is just like we're repeating the internet all over again from the 80s and 90s. And I'm proud to be talking about it because I think that Connecticut residents and Connecticut students have unique time right now to pay attention to what's going on and to actively innovate in this space, because I think this is going to be an opportunity for our state to bring back its economy, and then for us to also better the rest of the country and the rest of the world. But a little bit about me. So again, I'm a Connecticut resident, born and raised in New Britain here in central Connecticut. I went to CCSU for my undergrad in finance. Prior to that, I was in the Army for about 8 years. So I was a late graduate start in my early 20s, early to mid 20s. From Central, I started working for United Technologies Corporation. That was back in 2014 as a Treasury intern at that time. So I did 2 years in Treasury. And then after graduating from Central with a finance degree, that led me into UTC's, their financial leadership program. So it's one of their financial executive programs. Spent about 2 years in that program doing 4 different roles at UTC in various operations, financial planning and analysis roles. I had worked for Otis Elevators supporting Mark George at the time in the senior finance executive team. And I left UTC in 2018, August of 2018, to finish my MBA at UConn full time, which I attended in Hartford. And graduated last year. And over the last 2 years, I've been helping different entrepreneurs in the state, coming up with a lot of different ideas and trying to create new businesses here in Connecticut. Now, my journey with Bitcoin started during or while my time at UTC. Before you recorded, you were talking about how, you walk into an MBA class and you look around and you've got those few people maybe in the back of the room that are looking at a Bitcoin ticker, or they're like checking the charts or something for crypto. That very much was me. That was me when I started at UConn in the part-time MBA program in 2016. I remember hearing about it, here and there in classes. And, I was a finance person myself. So, I had a little interest, but I never had the time, like a lot of people, to read into it. You just kind of pass it by. But it wasn't until October of 2017. I was actually at UTC. We were sitting down and we were getting presented with the new marketing video, the new promotional video that UTC was going to launch. And we saw it before everyone else did. And it was one of those like really cool, like, future tech kind of videos, new ways to manufacture. And it was like this new, part machine, and then it was like new ways to do marketing. And then they had all their social media channels up. And then there was a part where it was like new ways to do finance, and it was flashing all these different stock tickers. And then boom, the Bitcoin logo popped up right there. And then it kept going. And I remember when I first saw that, I was like, whoa, okay, hold on. Because it just, for me at that moment, it brought it from, I've been passively seeing this in class. I've been kind of hearing about it on the news. I always said to myself, you know what, I missed that boat. If I had gotten on that a couple of years earlier. But seeing it right there at UTC was very significant because at that time I had thought that, this Fortune 20 company now maybe considering accepting it, using it. It's in their marketing video. Why would it be in that video if they weren't trying to do something like that? And full disclaimer, that UTC had not ended up working with Bitcoin. This was a marketing promotional video. I actually raised my hand right after it ended and had asked them directly if that's something they were going to work with, because if it was kind of significant. I'm not going to be the only person asking questions if they're going to release that video. But that's kind of what catapulted me down the rabbit hole of learning about Bitcoin. This was October of 2017 when I took the first step. And, that's led me on an incredible journey over the last 2.5 years of learning about not just digital currencies and cryptocurrencies. I had to take a step back at that moment and say, if I wanted to learn what this new currency is going to be, I need to learn what currencies really are. And I need to learn about the history of currencies. And then that led me into learning about central banking, monetary policy, and it goes on. Now, I did have the opportunity with the program I was in at UTC, where I had constant exposure to all the corporate executives, financial executives within the company on a weekly basis, almost a day-to-day basis. And, I probed around and I asked, because, I wanted to see what these thought leaders in finance of one of the biggest companies in the world thought of this. And the outcome didn't surprise me. I'd say half the people didn't know about it at all. Because this is very new. It's very emerging tech. You don't really expect the 50 something year old who's been doing their traditional corporate finance role their whole life to know it. So half didn't know it at all. A quarter of the senior staff that I had met had known about it, but either they hadn't looked into it, they were a little skeptical, or, it wasn't really a big deal to them. It wasn't changing their life. But I did find about 25% of some of the brightest minds in finance that I had ever talked to were sold on it. And they not just had known about it for years, but they were actively researching in the space. They were actively accumulating in the space. And they thought that this was going to be the next currency of the next financial system, but also the digital economy. And then, that for me, when I heard these professionals saying this, I thought, I don't know anything. They know much more than I do. So if they're really focused on this, maybe I should be too. And then that's really where it all started. This was October 2017. So, here we are now. And we'll get into it on kind of what it is and how it works. But your listeners, and especially the business people out there, yeah, I think we're kind of past that point where people think it's not going to happen or it's not going to work. This is coming. So I think that, pay attention to this conversation, listen. There's a lot of opportunity here right now for entrepreneurs and small businesses to get on board early and integrate into your current business processes to help set you up to be in a better place 10 years from now, just like the businesses that formed websites before everyone else did back in the 90s, before the tech boom happened in the early 2000s.
Awesome. So you get a bonus question because I was listening to what you were saying about the financial leaders, and I have to ask you this. Jamie Dimon, I think in 2016, 2017, he said Bitcoin is a total scam. It's not worth even talking about. What happened? Like, what changed his mind? Because, well, do you mind telling me what happened? Where does he stand now at this point? And Jamie Dimon, of course, is the CEO of one of the biggest banks in the country, JP Morgan Chase. So
yeah, so Jamie Dimon, Jerome Powell, all of these business elitists and stuff, they all have incentive in the current financial system. They all have incentive in dollars and fiat paper currency that's made and controlled by the central bank, right? They're the first people to receive these interest-free loans. So, they're motivated to continue that system going and going. Jamie Dimon, it's just funny that Jamie Dimon was out there for several years now, completely shooting it down, while JP Morgan in the background was building their platform themselves. I mean, JP Morgan, I think they, a year ago, I think they had officially, and it's the last that you heard Jamie Dimon talking this way, but they announced that they were, they had patents on a few different blockchain platforms and technologies. They were getting ready to integrate it into their own customer base themselves, because they had custodials. They had people at pension funds at like UTC and many other companies that wanted exposure, but they don't know how to manage it. So they need a custodial. So for Jamie Dimon, I think it was half that he has an incentive to continue the current financial system the way it's going. I also think there's the political side of that. So, if the CEO of one of the biggest banks in the world comes out and is for crypto, I mean, the market's going to react by buying a ton of it and completely converting off. So I think there's that too. But yeah, I mean, JP Morgan, has definitely been actively involved in the space. They've been accumulating, and they've been doing the complete opposite of what you've seen on the TV over the last 2 years. So, I'd be careful when you're listening to Jamie Dimon.
Right. Well, he's come around just in the last year or so or more, but I know he is now a fan publicly of crypto and Bitcoin. So the one holdout so far as I know, or as far as I've heard, is Warren Buffett. I think he still believes and publicly says it's a scam, or he doesn't believe in it. I don't think he's come around yet.
No, and
he's gonna come around.
Berkshire Hathaway, listen, Warren Buffett, I respect him as, I was a financial student. So Warren Buffett was one of the people that we studied in business school, and I respect him as an investor, but Warren Buffett also has incentives to keep the current system floating. Berkshire Hathaway is one of the largest shareholders in Wells Fargo and like many of these banks. So, he's got a can of Coca-Cola in front of him on every meeting. And we know that Coca-Cola kills people. I mean, sugar, you know what I mean? Like there's just this. So I think that Warren Buffett also just has incentives in the banks. Warren Buffett's business is affected if the banking industry is affected. So, I don't think we're ever going to see Warren Buffett come around and talk about Bitcoin in the right way. But he also hasn't talked about metals that way either. But he's sitting on $180 billion of cash. He's been sitting on $180 billion of cash at Berkshire for about a year now. We were wondering why a year ago, he had $180 billion in cash. It's because he knew what was going to come up this year with the economy. Recession indicators were screaming last year. So again, I think it's the old boys club just continuing what has existed. They want it to keep going. But that's going to change very quickly here because the dollar is changing very quickly. So no matter what Jamie Dimon says, no matter what Warren Buffett says, no matter what Jerome Powell says, no matter what, Joe Schmo from down the street says, who is trading on Robinhood day to day now because that's all he's been doing for 3 months, there is a total reset and shift happening in the background that most people don't know about. And the dollar's time of existence is ending. And we are converting into the new economy. We're transitioning into digital 2.0. This is going to be the catapult that sends society into the new connected economy. And Bitcoin is going to be the currency in that system. And whether these guys like it or not, that's just, in my opinion, at least, that seems to be the way things are going.
All right.
And it's needed. It's needed. So
yeah. Perfect segue into asking you this question, which is, what is Bitcoin? So explain it to me like I'm a 5-year-old, if you could. And then you can explain it to me like I'm not 5, but try me with 5 first.
Okay. So this is an analogy that I actually heard a few weeks ago. So it's not my own, I can't credit the person. I actually don't remember their name, but think about the current payment system. So the dollar, your Venmo, your PayPal, think about that system like a bus system, right? For transportation, public bus system. So you go to the bus stop, you sit down, you wait for the bus to come and get you, and then you get on the bus, and then it takes you a few stops, and you have to wait 5 stops before you get off the bus. And about an hour's gone by, right? An hour and a half of commuting time. Think about Bitcoin like Uber, right? With Uber, you get on an app, you're able to hail a cab. It's there in minutes. You get right in. It brings you exactly where you need to go. You get out. The payments happen on the app. You don't even have to touch your wallet. And then you leave. In about 10 minutes, 20 minutes has gone by. Bitcoin is a protocol. It's a new technology, the same as email, where no one controls it. No one owns it. It was created. It was launched, and it's decentralized. So it just exists on the internet, and we can all use it now. That exists. It's a protocol. It's also a payments network. So just like Venmo, you send Venmo your dollars from person to person, a peer-to-peer system. That's what Bitcoin is. I can send Bitcoin to you. You can send Bitcoin to me as fast and as easy as Venmo. But the difference is that we don't rely on a bank or someone walking into an office in the morning to actually, in the background, process those payments for us, right? They just happen instantly. Bitcoin is also, on top of that, it is and this is one of the most significant part, is it's also the settlement layer. So let's think about Venmo again, right? Let's think about when you pay someone with a check, right? The check goes into your bank, and then someone processes the check, and then they make sure it's settled, right? So you have to wait for your check to settle in your bank account a few days. Same thing with stocks. When you trade a stock, you can't usually trade again right after because it needs to settle. So it needs to go through 2 days of someone showing up in an office, typing on a computer, and then making sure that it's okay. Now it's settled. We know that that money's with that person, that money's with that person. Bitcoin is self-settling. So when I send a Bitcoin transaction to you, you receive it in minutes. There's no bank or intermediary or government or anyone that stopped that from happening. And it also settled within that same time. So you know that you have the money that I just sent to you, and I know that I no longer have the money that I just sent to you. And that settlement portion of that is so significant because, you know, that's what people I think don't understand sometimes, is that when you remove the need for a bank or a third party intermediary to do these processes that we once had to do, it becomes a much more efficient payment process. It becomes a much more secure payment process. And you don't have to, and there's less fraud. You don't have to worry about someone messing with the system. And that brings me to the final point about what Bitcoin is, at least in my mind. It's trust. You know, it's trust. It's trust. Trust is one of the most fundamental, you know, sound things we need to have in a banking system with a currency. And right now, as we're seeing around the world, you know, as the banks did what they did in 07 and 08, it's happened again. And trust within our financial system has never been so insecure. So Bitcoin is trust at the end of the day. And I hope that kind of maybe cleared up, you know, an easier way to explain it. I've been really trying to figure out how to refine that down too, by the way. And I think that might be it. We'll see.
It did. I appreciate you keeping it on like a higher level so I could like follow along. So, but you did say, okay, so this gets the intermediaries out of the way, such as the banks. Cool, I get that point. But what about the government? So the government, we're dealing with COVID right now, and the government has to infuse, right? Especially the US government prints money, infuses, you know, puts more money into the system to keep the economy going. If we didn't have money and if we didn't have the government involvement, what happens in this future state? If Bitcoin is the way to go and we have another recession because COVID puts us into a gridlock and we just can't trade and the economy just slows down, what happens in that scenario in a Bitcoin world?
So that's good. I'm glad you asked that, because that question brings up an understanding of what the currency actually is and how the monetary system functions. The US dollar used to operate off a gold standard. So up until 1970, you used to be able to convert physical dollars in for actual physical gold. Gold for thousands of years has been money. Gold has been sound money, gold and silver. We've always heard that, you know, especially people our age. We've only been around like 20, 30 years now. But it's true. And the reason why precious metals have always been considered a form of sound money is because they're an ultimate accounting system, right? It's the best ledger system you could have. There's a fixed supply of this unit of account. And if I know that and I can distribute that, then it becomes very kind of easy to manage and track like who has what. And then more importantly, that money is worth more in the future because there's less of it, right? So like if you save today, in the future, your savings are going to be worth more, right? In 1971, Richard Nixon took us off the gold standard. And that standard had existed since 1944 after World War II with Bretton Woods. And in 1971, when he took us off the gold standard, that's when we went to a new form of a monetary system and a new currency, which is called a fiat-based currency. It's a paper currency. And that is operated on a debt-based economy. So in 1971, that's when, you know, money changed from being hard, sound money to paper money, that the only way you create more of it is by creating debt through credit, right? We have a credit-based economy. So credit and physical money are not the same thing, but they're considered the same thing because they both have purchasing power. So if I take out a loan, if I take out a credit loan, I can go and purchase something with that loan. Even though it's not physical money, I can still purchase something. And because of that, you know, they're considered the same. But we start seeing issues with that when there's too much debt in a system, because when there's too much debt, you know, people have to pay interest on that debt, right? But in order to pay the interest on that debt, they have to pay it with physical cash, right? Money, the actual money. But if there's now, like, if I'm trying to pay off my loans as fast as I can, and there's only so much physical cash in circulation, that's where we start to see what's happening right now, is that there's not enough dollars in the system for people to actually, they go back to their bank expecting that they're going to have $50,000 there, when in fact there's only maybe 5,000 because there's not enough physical cash. So this whole system of a debt-based economy, credit, really started in the 70s. Now, that's why the Fed needs to supply the markets with liquidity now. That's why they need to create more physical currencies, because so many people are in debt. So many people have so much credit built up that they can't service that debt. And if they can service the debt, there's not enough dollars to do it, because, when everyone comes back for their share, they realize that it doesn't exist. It's a mirage. Bitcoin would change this, and arguably, if we were still on a gold standard, this probably wouldn't have happened. These booms and busts we've seen, they're caused by central banking. We've been told, our entire college careers, even with me, I went through business school in a strict finance degree at CCSU, even at UConn. We don't learn about economics. And if we do, we learn about Keynesian economics, this ideology that the banking system should be centrally controlled by one central bank who manipulates interest rates, manipulates the flow of capital, and they're the ones that create the boom and bust by the manipulation of those interest rates in the flow of capital. People will argue that that's needed for, steady growth in the economy, and that's not what we're here for. We're just for the fundamentals. But the truth is that when you manipulate the system in that kind of way, you get exactly what we're experiencing now. People are broke, businesses are overextended in credit and debt, and they need more money in order to operate. They need more money in order to even pay off that debt. So the Fed has to come out and print $7 trillion more of it to do that. The problem with this system, though, is that it gets to a point where it's basic mathematics. What's the national debt, right? What's the overall national debt? What is the interest rate on that debt, right? And then you do that math and you get, well, to service that debt, to pay off that interest, what's that number? And then what do I make in GDP? If my country is not producing enough to service the debt to pay off the interest, I have to take out more debt, right? And then this is where we get to the point where I think we're headed to, where it's the early signs of hyperinflation. We've seen it in history. We've seen it in Venezuela most recently. We've seen it in Argentina. We've been seeing it around the world over the last 10 years. And, the US is getting to that point now where we're getting to where that numbers game, the math game, is just going to compound and it's going to get bigger. Bitcoin would change this, though, because with Bitcoin, it goes back to a gold standard. It goes back to, a system where there's only so much of it that exists. So the unit of accounting is very simple. It's easier to do. And the best part is it prevents a lot of this fraudulent practices from happening in businesses and banking. Why? The only reason why the banks have been allowed to get away with what they've been allowed to get away with over the last 20 years, 30, 40 years, is because they're able to just create more money out of nothing. And if you have the ability to create money out of thin air, you're going to go out and you're going to loan to people that you shouldn't be loaning to. You're going to take these risky bets on business and stuff. But if you're in a financial system where there's only so much gold that exists and you can't create more of it, you can't spend more that you have. So you will not take on those risky bets. You will not go and fight wars in countries that you don't need to fight wars in. You will not, as a bank, loan out these fraudulent loans because you can't do it. You don't have that much capital. You can't create more of it. So I'm making the argument that I think a movement into a Bitcoin economy, into the digital economy, brings us back to a gold standard. And we've seen historically that in periods of society, when the financial system the economy has operated off of a gold standard, and I think Bitcoin is the 2.0 gold standard, it has been the best periods in society. They call them the periods of enlightenment. There's savings are worth some. And we saw this after World War II. The reason why our grandparents in the 50s, 60s, and 70s, 40s, 50s, 60s, and 70s in the US were doing so well, they could buy bought a house, one car. It's because their savings were worth more every year. It's because they were working off of a gold standard. You know, these are periods where society is functioning. People can plan for the future. They can save for the future. But that all went away in 1970. So I think we're slowly moving back there. But I think this is also what explains kind of what we're seeing right now around the world.
All right. So I think I got it. I think it finally sank in. So you're saying Bitcoin is a finite resource, very similar to gold. Yes, you can mine it, but it takes resources and effort, and you can't have an unlimited supply. It's not like printing. Today, the government can literally push a button and print money, or the digital representation of money. Yeah. Whereas Bitcoin is more finite. So I think I finally got it. Thank you.
And I think this kind of ties into the next point we're going to talk about, but this is important to understand, especially during recessions and stuff, and what we're seeing right now with the inflation of the currency, the dollar, we're seeing massive inflation. The Fed just did $7 trillion in a matter of a few weeks. The overall response to the financial crisis in 2007 was like 14 trillion, at least 14 trillion, but that was over like a 10-year period. So we're seeing experiments in the monetary system, monetary policy that we haven't seen ever historically. Bitcoin will benefit from this, just like gold benefits from it. And if you look at past recessions, during recessions, gold prices are always spiking because people flock back to that for hard money, right? And then that ties into like the price. Well, people will say, well, what can you expect the price of Bitcoin or the price of gold be like through these periods, right? It could be anything. It could be infinity. Another important part of sound money, actual true money, is that there's no price against it. It's not priced in itself. It's priced against something else, right? So when you look at the dollar, people always say, well, what is gold priced in right now to dollars? What's the price of gold? What's the price of gold? When you say what's the price of gold, you're really asking what's the price of gold in dollars, right? Mm-hmm. So and when you look at the price of gold in dollars, for me, that's just a direct representation of the amount of inflation going on, because gold is fixed. So when gold is priced at $1,800 an ounce, you just see how much inflation exists. It can go up to $5,000 an ounce. That just, for me, that means that there's more inflation. There's more currency created. Bitcoin acts the same way. People say, well, what's the price of Bitcoin? They're doing the same thing. They're pricing it in dollars. So, I think Bitcoin right now during this current recession, arguably going into a depression, will help people preserve wealth. It will help people escape. They'll have an insurance plan, at least, from the current financial system. And I think for millennials, it's important because this becomes our retirement savings plan. We can't rely on the system that has been failing us, millennials, over the last 15, 20 years. So we've got to think about this new system going forward.
So how has it done, like since COVID? In terms of value, I guess, short term, I understand it's very short term, right? Certain things, it takes a little bit of time for a trend or the wake to really establish. We're still going through the recession, but how has it done in the last 2-3 months?
It's done exactly like it should. It's actually done fine. So Bitcoin's price in general is volatile. I think people know that. It's a new currency. It's a young currency, and its market cap is fairly low considered most reserve currencies around the world. I think right now its market cap sits around $180 billion. When in comparison, gold is priced at around, I believe, 10 to 14 trillion. Don't quote me on that either. But Bitcoin had an initial drop when the Dow dropped 40%. When the first sell-off really happened in the equities market, Bitcoin took a tumble with that. So did gold. Everything did, right? That's what happens when these first crashes happens, these flash crashes, is people are like fleeing to liquidity, right? So they're selling out to whatever they can for cash. So it had a drop like that, but it's rebounded. It's priced at, I believe, last I looked, $9,100, $9,200 a coin. And it's really fluctuated between, a low of, the low we had seen during that flash crash that was going on was $3,800, around $3,800. It's come back up since to around $9,200. And it's been hovering around that price since. So, again, short term, it's been volatile, but I mean, if you've been buying and holding, it's been stable. And if you look at especially the price over Bitcoin over the last 10 years, on average, you would have had to if you had held it on average, it's actually been fairly stable, and you've actually would have outbeat any financial asset over the last 10 years just by holding it. So it's doing okay right now, to answer your question though. But I think the real experiment is going to be going forward, and for a few reasons. Number one, banks are finally on board, right? The institutions are here now. This is a difference than the last bull run in 2017. JP Morgan is integrated into their systems. Fidelity has it on their platform. Cash App has it integrated. PayPal and Venmo just announced 2 weeks ago that they're onboarding it into their payment systems. Bakkt has been launched. Bakkt, B-A-A-K-T, is a subsidiary of the International Continental Exchange, the ICE, which owns the New York Stock Exchange. So they're on board. So now you've got banks on board. The second is that if you look at the macro view of what's going on in the economy around the world, bonds. So we have negative interest rates. This is also an anomaly that we've never seen in 5,000 years of recorded history. And it's not even written in textbooks yet, because negative interest rates, quite honestly, shouldn't exist. A negative bond means I give you $100 today, you give me 90 back next year, right? So bonds, the US is one of the last countries in the world, I believe, that has positive interest rates. So if bonds are negative, that means it's a negative yielding asset. That's an asset that's losing money, right? So if you don't invest in bonds, well, okay, you invest in stocks. Well, stocks are doing good, but if the market tanks again 40% and the markets aren't doing good, then that's a losing asset, right? This becomes important for the pension funds. This is something people also have not considered. Pension fund managers have an obligation. They have a fiduciary to return anywhere from, I believe, 5 to 7.5+% a year. And I think what's going to happen coming forward here, and we're already starting to see it now, and I believe over the next year or so, you're going to have pension fund managers that are going to be looking for yield. They're going to need it because it's a law. They're a fiduciary. And if they're not getting it in bonds and they're not getting it in equities, then they're going to turn to precious metals, gold and silver, and Bitcoin. And we finally have the intermediary custodials that exist now, the banks, the institutions that will be the custodials for them. So I think we're going to see a massive wave of adoption into Bitcoin as we continue this recession, depression, and we continue forward over the next 2 years for sure.
Awesome. All right. Last question, because there's so much to know about Bitcoin, but we won't cover it today. Where can we go to get some more information about Bitcoin?
Yeah, of course. Great. So you can go to AdoBtion.substack.com. AdoBtion spelled ADOBTION, had a little play with the little Bitcoin logo on there and everything. You could also look at the AdoBtion YouTube channel. This is a channel that I created strictly where I just teach Bitcoin. There are tutorials, how to buy and sell, how to send Bitcoin. There are also explanation videos like I'm talking to you today on why it's important, why you should save in the future. My goal with that channel was to try to break Bitcoin down in a way that's easy for people to understand so they can start adopting it today. So you can do that. I'm on Twitter as well. And then if anyone, say you can't remember AdoBtion, you can find Joseph Rapisarda on LinkedIn. Also, I have a Twitter handle, J_Rapisarda, and I post quite a bit through there.
Perfect. All right. We'll put everything down in the video and in the description. So great. Thank you so much for joining us today, Joe.
Thank you so much, Christina. Thanks for having me on.